decided to conduct a special military operation.
There is no purgatory for war criminals. They go straight to hell.
Don't panic. We are strong. We are ready for everything.
This is Bloomberg Surveillance, early edition.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London, standing in for Francine Lacqua, and here is what's coming up on today's program. Russia launches an attack on Ukraine. Vladimir Putin orders an operation to demilitarize the country. The Ukrainian government calls it a full-scale invasion. The West's condemnation is swift. The EU calls the invasion the darkest hour since World War II. The US and its allies prepare harsh sanctions on Moscow. European markets post an unsurprisingly ugly open. Travel, tech and banks lead losses in early trading. Let's check in then on the market moves. Then they have been pronounced across the risk asset space. The move into havens, the move into gold, the move into treasuries. Brent above $100 a barrel, currently at $103 a barrel. And of course, the equity sell-off that we're seeing here in Europe, pairing some of the more significant losses that we saw at the start of the open, but still down almost 2.8% on the benchmark, down 12 points. Brent crude, again, above $103 a barrel, up 6, almost 7%, as Will Kennedy from Bloomberg was saying. OPEC Plus next week, can they do anything to alleviate the cost pressures, and what will this mean for inflation and the central banks? Gas prices surging here in Europe, up 28%. Don't forget that Europe gets about 40% of its oil and gas from Russia. By the way, Russia has said it will continue to supply commodities, oil and gas, to Europe, and it continued to do that through the Cold War. The Russian equities are down at least 45%, being absolutely hammered. The ruble is down close to 6% as well. The Russian central bank saying it's going to come in with some FX interventions. We're watching that space. The G7 meeting, NATO meeting, European leaders are meeting in Brussels. Lions are crossing the terminal. We'll keep you up to speed with the headlines and the reaction as the West prepares further sanctions. The UK is down 2.5%. The DAX is down more than 3% over in Germany. And we've been hearing from the foreign minister as well. They've moved some of their diplomatic staff, the Germans, out of Kyiv, the capital, of course, of Ukraine. The CAC Garon is lower by 3%. You can see red across the screen here, and that move into safe havens. All of this, of course, because Russia and its forces have attacked targets across Ukraine, and what President Biden has called a premeditated war against the Eastern European country. Equity markets and futures are tumbling in response. Oil has soared past $100 a barrel. Putin says actions taken by Russian forces have been necessary.
Circumstances require firm and immediate actions from us. Donbass's People's Republic asked for help from Russia. I decided to conduct a special military operation.
That, of course, was Russia's President Vladimir Putin. Here's what Ukrainian President Volodymyr Zelensky had to say.
I, the National Security and Defense Council, the government, will be in touch. Soon, I will be in touch again. Don't panic. We are strong, we are ready for everything, and we will defeat everyone because we are Ukraine. Glory to Ukraine.
OK, let's get to our reporters in Moscow. We've got Henry Mayer, our Russian politics and international affairs reporter, and we have our managing editor for US government in D.C., Flavia Kraus-Jackson, for the US response, and Maria Tadeo in Brussels with the latest from Europe. Henry, let's start with you in Moscow. What has exactly President Putin ordered? What are the specifics?
Yes, well, it's very important to go into that detail because he made a televised announcement that was broadcast earlier this morning in which he said that Russia was launching a military operation in Ukraine, as he put it, to demilitarize the country. It was a long and fairly rambling speech in which he went into a lot of historical grievances. But he also said, and very worryingly, that another goal was the denazification of, as he put it, the regime in Kiev. That implies very much so that we are seeing a goal of occupying the entire country and removing the government by force.
And Henry, what's the situation when it comes to the military operation in Ukraine? Do we have a sense of how far and how fast the Russians have gone?
So the military operation began early this morning with missile attacks on cities across Ukraine. The Russian Defense Ministry said that it had successfully disabled Ukrainian air defense systems. And then what we've been seeing since then are increased reports of Russian military equipment, Russian troops crossing the border, tanks rolling across the border from occupied Crimea into the rest of Ukraine, also from the north, from Belarus. There's a major ground assault now underway.
A major ground assault. And what has the reaction been, Maria Tadeo, in Brussels? What has the reaction been from EU leaders?
Well, I mean, Tom, you heard that speech from Ursula von der Leyen just an hour ago, where she said there's no justification for this. And this is not a peacekeeping operation. This is an invasion of Ukraine, and it's not a war of equals. Remember, the Ukrainians do not belong to any military alliance. They don't belong to NATO. They're under no impression or mistake that they're going to be potentially helped by any of this. This is a war that the Ukrainian people are going to have to fight for themselves. Now, in terms of where we go from here, at 8 p.m., of course, we know the European leaders will be meeting here in Brussels. This is an emergency summit. Of course, the big discussion will be sanctions. We did hear from the top European diplomat saying this will be the harshest package that I will present to leaders today. We did get indications from von der Leyen of what that could mean, essentially freezing Russian assets. We could also see blocking of tech and key markets for Russia. And the goal here is to stop the Kremlin from being able to prevent a further war effort. The other issue that will feature probably very highly on the agenda in that meeting too is what to do with Ukraine. What kind of financial assistance? Remember, the economy is already hurting and has been hurting for weeks. And the other issue still very much is what to do with weapons. Is there a way to facilitate weapons to this country? Remember, as I said, this is a war that Ukrainians will have to fight for themselves. And for weeks, we've heard from the Ukrainian government, this is not a war of equals. We need more weapons.
OK, from the EU to the US now. Flavia, what is the US response?
Night here, Biden has been huddled with his members of the national security. He's spoken to the Ukrainian president. He's expected to address this publicly on Thursday. Of course, from the U.S. perspective, it's been long flagged. It's like watching this terrifying movie playing out in slow motion. They saw it coming. They announced it was coming. The big question here, of course, for the U.S. is that they've made incredibly clear that they are not putting boots on ground. So all they are left with is the rhetoric of threatening economic sanction. And part of the strategy was if they talked it and bigged it up enough, would that be a deterrent? Well, the facts on the ground obviously prove that that has not been the case. As we've written in a very timely feature today, Biden's team in a circle always feared that sanctions wouldn't be the thing to stop Putin. And tragically, that is revealed to be true.
OK, Flavia, thank you. And thank you, of course, to Henry Meyer in Moscow, our Russian politics and international affairs reporter, Maria Tadeo in Brussels, and, of course, Flavia Kraus-Jackson there, the head of our US government coverage in D.C., keeping us abreast of the reaction to this invasion by Russia. Let's check in, then, on the Russian markets. The equity markets absolutely hammered as they brace their investors in Russia for these additional sanctions that have been outlined there by our team in Brussels and in D.C. The benchmark IMX in Moscow down 40%, down more than 40%. The ruble is tanking as well, down more than 5%. And they're the financial Sberbank and VTB Bank, both eyed and both suspected to be in the focus of additional sanctions, particularly from the US. And you can see Sberbank down almost 60%. Joining us is Christian Müller-Glissman, Managing Director for Portfolio Strategy and Asset Allocation at Goldman Sachs, to work through the market reaction, the dramatic market reaction that we're seeing. Christian, great to get you on this morning. Just give us your take on what you're seeing across these markets. Is this the short-term reaction, or are we going to see more pronounced losses across the equity space?
Yeah, no, I mean, clearly things are very fluid, no? But the problem is this is now coming at a really bad time for markets, because for all this year, we've been dealing with tightening financial conditions for other reasons, no central banks fighting inflation. And the market has really tried to establish a growth narrative, because the only way risky assets can make progress if you have central banks tightening policy as aggressively is if you have a good growth narrative. And now you're dealing with a growth shock, which is particularly for Europe, but pretty much globally, because you are even further tightening financial conditions, risk premia in equities and credit, everywhere are going up. And at the same time, you have that sharp rally in commodities, which is implicitly tightening financial conditions. So there's a real risk the market now gets even more worried that you're dealing with a sharper growth slowdown. And I think that's kind of in the near term probably going to dominate. Generally, when we look at geopolitical risk, it often creates opportunities to kind of step in, because markets often overprice geopolitical risk because they're worried about escalation. But it's very difficult to say at this point how deep that risk-off can get.
OK, Christian Muller, you're going to stay with us. Christian Muller-Glissman from Goldman Sachs. Really important insights on such a crucial day, an historic day, a dark day for Europe. And, of course, the asset price reacting to what is happening geopolitically. Coming up, Russia's invasion of Ukraine sparks a wide sell-off on global markets. Stocks plunging, treasuries, oil and gas all surge. We're going to get the latest market reaction next. We're going to get the calls from Goldman Sachs. This is Bloomberg.
We will present a package of massive and targeted sanctions to European leaders for approval. With this package, we will target strategic sectors of the Russian economy by blocking their access to technologies and markets that are key for Russia. We will weaken Russia's economic base and its capacity to modernize. In addition, we will freeze Russian assets in the European Union and stop the access of Russian banks to European financial markets.
That was European Commission President Ursula von der Leyen this morning announcing a package of sanctions targeting Russian assets in the EU. You can see losses of 2.6% across the European benchmark, and you can see that Brent is above $103 a barrel and gas is jumping. Gas futures up at more than 30%. Equities in Russia down 37%. Still with us is Christian Muller-Glissman, Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. Christian, before the break, you were talking about the inflationary shock and the potential growth shock. Are we looking at stagflation as a real risk now?
Yeah, no, I mean, definitely that probability will have to be repriced in markets. I think you have that commodities inflation now accelerate. At the same time, there's risk of supply chain disruptions because Eastern Europe and some of those areas might be embedded in European companies' supply chains. I think you will have that financial conditions tightening, which weighs on growth. You have a corporate confidence shock, which might delay investment. On the positive side, Europe still benefits from the EU's recovery fund. So that means that you have a bit of fiscal stabilizer, which supports growth. But definitely the growth inflation mix is deteriorating a bit in function of that, at least in the near term.
Christian, what is your advice to investors at this point? How do you position in this environment?
Yeah, I mean, we've downgraded credit last week and upgraded cash in our asset allocation to kind of nod towards a slightly less friendly market backdrop, which is not only related to Russia, it's really related to this financial conditions tightening, which we're currently seeing and which is intensifying. And I think we still think that you want to be overweight real assets, so we're overweight commodities and equities, and you kind of want to broadly avoid nominal assets because they can't help you much in the portfolio. You see this in the last few days of risk off as well. I think the bond market doesn't have much buffer to give. So you need to look at alternative safe havens to protect the portfolio. So clearly raising cash is one way to reduce risk. But we've also looked at gold, safe haven FX, and commodities broadly being a bit of a safe haven currently because it's at the center of this trouble.
Yeah, 2% move in gold today, Christian, almost 2% move. Do you bring forward your forecast for 2150 on gold?
Yeah, I mean, listen, that forecast is as always with gold, it has this kind of safe haven characteristic, which would definitely accelerate some of that kind of appreciation. What's really interesting in the last month is, despite the large increase in real yields we've seen in the US, which historically is a key driver of gold, like gold has done really well. It's generally been trending up and obviously spiking now in function of Russia, which tells you that positioning in gold probably has been quite light coming into the year. A lot of people were joking last year that there was a huge inflation spike, but gold was not really an inflation hedge, and it's true. But now you start to see that gold is kind of reasserting itself as a safe haven, and in particular with regards to geopolitical risk.
Really important insights on a crucial day for the markets. Christian Müller-Glissman, Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. Thank you. OK, up next, we cover the situation in Ukraine and Europe with General Sir Richard Shirreff, former NATO Deputy Supreme Commander. That conversation is next. This is Bloomberg.
These are among the darkest hours for Europe since the end of World War II.
That was the EU's top diplomat, Josep Borrell, saying that Russia's invasion of Ukraine is the darkest hour in Europe since World War II. Just quickly checking in on the markets then, because, of course, the pain being felt still across the equity space and that move into safe havens. European stock 600 down 2.6%. Brent is above $100 a barrel, above $103 a barrel, gaining at 7%. European natural gas futures up 30%, just adding to that cost pressure, inflation woes and the challenge for central banks. And Russian equities pairing some of the heavier losses. But look, you're still down 29%, and the ruble remains under pressure, of course. To discuss the geopolitics, the military action, we are joined by General Sir Richard Shirreff, former NATO Deputy Commander for Europe and author of the 2017 book, 2017 War with Russia. Currently, he is managing partner of Strategy Worldwide. So, Richard, thank you for joining us. How dangerous is this moment? And I ask that question with you drawing on your experience at NATO.
I think it would be impossible to say that, to state the full impact of the danger of this moment. This is as dangerous as it gets. This is the most dangerous moment in Europe since the end of the Second World War.
What is your assessment from what you've seen of the military aims and goals of Vladimir Putin and his military at this point?
I think we have to assume from what we're hearing that Putin is going for broke, that he is set on occupying Ukraine and bringing it firmly under his boot. We're seeing, I'm getting reports of multiple attacks on multiple axes, and the Russians don't muck about. If they attack, they go for overwhelming force, and that is, I think, what we are seeing.
Overwhelming force. How does that play out? What are the next stages of this conflict? How do you see it going day by day, hour by hour?
Well, it's impossible to predict precisely how it will go because there are so many variables and factors at play. I mean, the first point is that the Ukrainians will fight. Putin is not going to get an easy run at it. And if the Ukrainians fight, I think all the signs are that we are going to see warfare on a scale not seen in Europe since 1945. So think back to the pictures and photographs and grainy film from the Eastern Front of the Second World War and be prepared for the same thing.
Well, that is a grim prospect. So, Richard, what is the risk? Is it naive to think that this level of warfare can happen on NATO's borders without NATO being sucked in at some point?
Yeah, you're absolutely right. It would be naive to think that NATO is impregnable and that it might not get sucked in. And that places an overwhelming imperative, I cannot stress that highly enough, on NATO to really mobilize, man the ramparts, strengthen its forces in Eastern Europe, and be prepared to really demonstrate strength and will. Because we have to recognize that if this thing gets out of control, and once a war is started, a dynamic is created which is almost impossible to control. Putin might think he can control it, but he won't. And of course, we also know that Putin has said he thinks the most appropriate security settlement for Europe is a new Yalta. which means Russian domination of Eastern Europe. And that means potentially direct conflict with NATO. So the only hope now, forgive me, is effective deterrence. And that means NATO nations really need to get their act together quickly and start mobilizing.
And just briefly, what does that mean? That means more boots on the ground in those NATO states. It means more military support for Ukraine. But it draws a line, surely, at this point, of NATO troops on the ground in Ukraine. How far do you need to see them go?
Absolutely no NATO troops on the ground in Ukraine. That would be a guarantee for the Third World War. But what it does mean is indirect support to Ukraine, as you've just hinted, as much as can be done in the face of this overwhelming Russian assault. But most important for NATO, it means ramping up, it means mobilizing forces. And of course, the reality as well is that I'm saying them against the backdrop.
So Richard, I apologize, we've run out of time, but really important insights on this dangerous moment. Thank you for your time. This is Bloomberg. Russia launches an attack on Ukraine. Vladimir Putin orders an operation to demilitarize the country. The Ukrainian government calls it a full-scale invasion. The West's condemnation is swift. The EU calls the invasion the darkest hour since World War II. The US and its allies prepare harsh sanctions on Moscow. European markets post an unsurprisingly ugly open. Travel, tech and banks lead losses in early trading. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London, standing in for Francine Lacqua. And here's what's coming up on today's programme. The markets front and centre amidst the geopolitics, the invasion of Ukraine by Russia. We're going to bring you live pictures of the Ukrainian president shortly. But let's check in on these markets. The European stock 600 down close to 3%. Brent is above $103 a barrel, gaining at 6.7%. Natural gas futures spiking 31%. Inflationary implications. Goldman Sachs saying the challenge for central banks just becomes more acute. We cannot rule out stagflationary risks because of the course the impacts on the economies of Europe as well. And Russian equities pairing some of the heavier losses. They were down 45%, now down 22%, and the Russian ruble remains under pressure. Treasuries are bid, yields lower on the US 10-year by about 10 basis points. Gold up. Oil, again, above $103 a barrel. So we are going to bring you live pictures now of President Zelensky of Ukraine, of course, at a moment of great and historic difficulty for that country. I'm not sure if we have a translation. We've had a few lines crossing, updating on the Russian military action into that country. Ukrainian President Zelensky is speaking, as we can see, and what he's been saying is, we're going to get the translation. So we're going to bring this commentary from the Ukrainian president live to you now. Let's listen in.
На нашу державу так само, як це зробила фашистська Німеччина у роки Другої світової війни. Наші держави по різні боки світової історії. Російська держава стоїть на шляху зла.
Okay, the Ukrainian president speaking in Ukrainian. We'll see if we can get a translation up for you. But let's update you and recap some of the lines that are crossing from this speech by the Ukrainian president. Zelensky saying battles are difficult in Ukraine's east, south and north, and Ukraine is breaking ties with Russia. Zelensky announcing that Ukraine is breaking ties with Russia. We will keep you across this story, of course, and these comments, this speech from the Ukrainian president. Okay. It is risk-off in the markets with investors seeking safe havens. Brent crude has surged above $100 a barrel. Russian forces have attacked targets across Ukraine. President Biden has called it a premeditated war against the Eastern European country. Vladimir Putin says actions taken by Russian forces have been necessary.
Circumstances require firm and immediate actions from us. Donbass's People's Republic asked for help from Russia. I decided to conduct a special military operation.
Okay, let's get out to Bloomberg's Russian politics and international affairs reporter, Henry Mayer. Henry, what are the details about how President Putin has launched this invasion? What do we know about his next steps?
So it began early this morning with a televised announcement pre-recorded by President Putin, in which he said that he was starting a military operation in Ukraine, as he stated it, to demilitarize the country, and in a worrying signal that his ultimate goal may be to actually occupy the entire country. He said that the objective of the mission is the denazification of the Kiev regime, as he put it. So on the ground, what we saw after that announcement was a barrage of missile attacks across Ukraine, which the Russian Defense Ministry said were intended to knock out Ukrainian air defense installations. And following that, we have reports of Russian troops and tanks crossing the border from several locations, from Crimea, occupied Crimea, into the rest of Ukraine, from Belarus to the north of Ukraine, and also from southern Russia. So what is underway is a full-scale invasion. A senior lawmaker, interestingly, said that went further than Putin on state television and said that what we want is a friendly government in Kiev which will respect Russian interests.
So we could be looking then at regime change ultimately in Ukraine. Henry, thank you for the updates on a hugely busy day for you and the team on the ground in Moscow. Our Russia politics and international affairs reporter, Henry Mayer. Let's check in then on the Russian markets. The MOEX, the benchmark in Moscow, has pared some of the heavier losses, still down 22%, had fallen as much as 45% in the earlier part of the session. We know that the Central Bank of Russia is going to be stepping in with FX interventions. We got those lines crossing an hour or so ago. The financial sector is firmly in focus when additional sanctions are announced, and there has been discussion about whether Sberbank and VTB Bank, two of the biggest lenders, would be targeted. We don't have details on that yet, but clearly investors bracing for more pain. Both those companies down almost 30%. So that's the Russian index paring some of the heavier losses. Sberbank, as you can see, and the ruble remains under pressure, down about 5%, and the yields on the Russian 10-year continue to spike. The safe haven moves, of course, globally are pronounced. The Swissy, the yen, the Bloomberg dollar index is higher, and of course gold as well. For more insight into the impacts, of course, the safe haven moves, but also the implications for emerging markets, who better to speak to really than Mark Mobius, founder of Mobius Capital Partners. Mark, let's just start with your reaction to what we're seeing, the pricing action that we're seeing across these markets.
Well, you know, it's really remarkable how different markets have reacted to this situation, because we now see, no surprise, of course, Saudi Arabia is up substantially, but Brazil is up. And a number of these emerging markets are flat. They're moving sideways. They're not going down. You have Mexico, Taiwan, Japan, Thailand. These countries are really moving sideways. So at the end of the day, it's going to be very interesting to see how this pans out, because if you take a big market like India, they are not down as much as the S&P. They're down, but not as much. And I believe they can weather this storm. And of course, China will probably be in a fairly good position, given the fact that they are not exposed to the situation in Europe so much, although they're exporting to Europe, but they're not exposed as much. So it's going to be a very mixed picture, I would say. And it's going to be very important for people to be stock picking, being very careful given the fact that interest rates are going up.
Okay. Mark, can we carve out Russia? Is it idiosyncratic when we look at other emerging markets? Is it a knee-jerk reaction we're seeing across the EM space, and then there's an opportunity to kind of rebuild positions in other markets? Or can we not overlook the energy implications for countries like India and Turkey?
Well, there's no question with oil prices, now over $100 a barrel, it's going to affect a number of countries in terms of their inflation numbers. But at the end of the day, if you take a country like India, they're more dependent upon coal for energy production, and other countries have alternatives as well. So we found that, in fact, the oil price alone is not really going to kill these markets. And countries like Brazil, of course, producing their own oil. So it's a very mixed picture, and at the end of the day, Russia has not really been an important market for us in any case. And I think that's true of most of the emerging market investors. Russia has not been a big factor. And what's dragged down the emerging markets index, of course, is China recently, but that could change. China benefits from the situation.
OK, Mark, I want to get your views on China shortly. Just to update you and the viewers, we've got some lines crossing. Britain's Prime Minister Boris Johnson will be addressing Parliament on the situation in Ukraine this afternoon. He, of course, announced initial sanctions earlier this week. Many saw them as not strong enough to do much to hurt the Russian economy. We'll see if the UK can come out with anything stronger in response as we continue to monitor how lawmakers across the West are responding to these actions. By the way, Zelensky, the president of Ukraine, saying Russia wasn't able to break the contact line in the east of the country. These headlines continuing to cross. Mark, the role then of China, it has its relationship, it's strengthened that relationship with Moscow. We'll see if it steps in regarding capital markets and financing for Russia at some point. But the role of China as a potential safe haven, is that where and is that how investors should be looking at China?
Yes, I believe so. I mean, there's no question that the Chinese will try to play a middle game. In other words, they will not move one side or the other in terms of Russia versus Europe. But generally speaking, I think China is going to be a safe haven because they're going to continue to produce, they're going to continue to grow. As you know, interest rates are going down in China. So it could be a safe haven. It remains to be seen, but I think given the fact that it's moved down so much, probably a good idea to increase in China.
OK, so increased exposure to China. We're seeing a marked move, of course, in gold. And we had a Goldman Sachs analyst on earlier in the show with a forecast of 2150 within 12 months. What are your views on the yellow metal, Mark?
As you know, I've been very bullish on gold for quite some time. And I think it's going to continue to go higher in view of this situation. And at the end of the day, with the inflation moving up, some of these commodities will continue to rise in line with the commodity rise. You must remember that with money supply in America going up by 35%, and then with all the cryptocurrencies, we're seeing an incredible avalanche of currencies around the world. And of course, that means devaluation of currencies, and that means, of course, inflation and higher commodity prices.
Mark, just talk to us about other inflation or other havens amid this inflationary environment and, of course, a reassessment of the impacts on global growth. You're looking at China, exposure to gold. Briefly, anything else you want to be adding at this point?
Well, at the end of the day, Asia generally looks pretty good because they're isolated from the situation in Europe. Of course, they'll be exporting to Europe. That will continue. So Asia looks generally, you could pick any country in Asia and you get some interesting opportunities. Thailand, Vietnam, Malaysia, Indonesia, even the Philippines. Of course, Taiwan is very big in the tech sector, Korea. So I believe that's probably a place to look. But interestingly enough, you get a situation like in Brazil where we never expected the Brazil market to be performing the way it's now, recovering. So we have to take a look at South America as well.
OK, Mark Mobius, really appreciate your insights on this day. Founder of Mobius Capital Partners, opportunities in China as a safe haven, also gold, and the opportunities as well in some parts of Asia on the back of what we're seeing, the fluctuations, the volatility across these markets. Thank you, Mark Mobius. OK, Ukrainian President Volodymyr Zelensky has been giving a televised speech. He says that Ukraine will be breaking off ties, has broken off ties with Russia, and giving a brief update on the military actions in that country. We're waiting as well from the British Prime Minister Boris Johnson, who's going to be addressing Parliament on the Ukraine situation later this afternoon. Coming up, we take a look at the commodities complex again and in more detail, of course, reacting to Russian forces attacking key targets in Ukraine. Brent above $103 a barrel. Stay with us. This is Bloomberg.
There is no purgatory for war criminals. They go straight to hell, Ambassador.
And those were the remarks from the Ukrainian ambassador to his Russian counterpart at this week's 10th United Nations Security Council. Bloomberg's markets editor, Christine Aquino, and executive editor for energy and commodities, Will Kennedy, will join us now. The drawdown, by the way, we want to look at the drawdown in terms of the Russian markets, down 60%. That is higher than the military action when there was military action in the Crimea. This terminal chart says it all. Drawdown from Russia's stock market at 60%. And the markets over in Moscow are currently down 24%, pairing some of the heavy losses of 45%, but still down 24%. The ruble is under pressure as well. That's a drawdown story. Bloomberg's markets editor, Christine Aquino, and executive editor for energy and commodities, Will Kennedy, are both with us. Christine, just get us up to speed on the markets moves that we've seen on this crucial day.
Well, Tom, yeah, as you pointed out, Russian markets definitely feeling the pain here as we saw the overnight developments. And yeah, I think it's hitting very close to home. Both Russian stocks and the ruble very much getting hit. But of course, the effect is broad spread as well. We could see that in demand for havens today. Treasuries, the dollar, gold, Japanese yen, all in vogue today as investors really just trying to seek shelter from the overnight moves that we've seen in markets.
And Will, let's bring you in at this point. How do you think commodity investors, oil investors are working through the news flow at this point?
Yeah, we've seen a massive jump in oil and we're way above $100 a barrel. The other market that I would highlight is gas, where we've seen a 40% jump in European oil and gas prices. Clearly, that's going to have a big impact going forward on European consumers who are already grappling with the energy crunch we've seen this winter. And the other one I think we should highlight to viewers is grain. Ukraine is a massive exporter of corn and wheat, and those exports look like they're being disrupted already. We're getting reports that ships will not be able to call in Russian grain ports, that financing for those grain exports is very difficult, and we've seen grain futures trade up as much as 5% higher, wheat at a 9-year high today. So food is going to be the other big inflation story beyond energy.
That's really worth pointing out, isn't it, that wheat and grain prices have shot up on the back of this, and that Ukraine is such a major exporter of those soft commodities, how that feeds into the inflationary impacts globally as well. Will, we've heard of legislators, we've heard of lawmakers from the West going around trying to find additional supply. There have been some reports that maybe the US will release additional inventories, and then we're looking ahead to OPEC+. Is there anything on the supply front that can ease the price pressures at this point when it comes to oil?
Yeah, I think that's going to be a very key concern for traders going forward. They're going to want to look at two things today and in the rest of the week. Firstly, sanctions and how hard those sanctions are and whether that will affect the ability of Russia to easily export its oil and gas. So far, it's worth telling viewers that there's been no interruption that we can see in the flow of oil and gas out of Russia. But, you know, sanctions could change that. We need to wait and see. But after that, the politics is really going to come into focus. OPEC meets next week. Will they come under pressure from the US and other large customers like India and Japan to release more oil to ease prices? Will the IEA react? It has the ability to coordinate a global stockpile release among industrialized countries. That's one option. I think that Biden, as he looks to punish Russia for its actions with harsh economic sanctions, will equally be keen that it doesn't get out of hand in the oil market, where American consumers are already being hit by the highest gasoline prices in 8 years. So those kind of political reactions will keep traders on hedge. This is clearly a bullish event, but there are reasons to think that there may be a political response that means some pull down. And then, of course, the other thing to keep an eye on is the Iran talks in Vienna. If there's a deal there, traders may be able to look to increased Iranian exports this year.
OK, so keep an eye on Iran, keep an eye on IEA, keep an eye on OPEC+. Will, from Will to Christine. Christine, we heard from Goldman Sachs, Müller-Glissman speaking to us earlier, Christian Müller-Glissman saying that a stagflationary environment now is a real risk.
Yeah, Tom, I mean, that's certainly on the brain for a lot of investors today, because, again, they're trying to weigh against the potential growth impact of what we're seeing now just from the geopolitical tensions, but also the potential inflationary shock. And as Will points out, this is not just a story of higher oil prices. This is a story of higher commodity prices across the board. We're looking both at hard and soft commodity prices. And that, of course, is going to add to this environment where we're already seeing higher prices for goods and services services even before we take into account the geopolitical tensions. Definitely something that investors are going to be watching out for, particularly on those rate bets, and something that central banks will have to contend with as well.
There's a line crossing right now in terms of the inflationary impact and commodities. Will brought this up. You've brought it up as well, Christine. Wheat futures in Paris surging 15% to an all-time high. The conundrum for the ECB on the back of these inflationary shocks, Christine.
Very much a conundrum, Tom. Is it going to be interesting how they're going to navigate this? And we've already heard from a few ECB policymakers this morning saying that they're watching the situation very, very closely. Of course, we know that inflation in the euro area is already at a record high at that 5% level in January. We're going to be seeing another update next week for the February figures. And that's, of course, going to be the last print before we see the ECB rate decision in March. Going to be an important one to watch.
Christine Aquino, fantastic on the market themes. Of course, the reaction here, the markets editor for Bloomberg, and of course, executive editor for energy and commodities, Will Kennedy, breaking down the moves across the commodity complex and what to watch going forward. Thank you both. Coming up, we will continue to bring you live coverage of the unfolding events in Ukraine, the international response, and of course, the market reaction. Stay tuned. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. We're keeping you up to date with all the lines crossing, the reaction to this invasion of Ukraine by Russia. Britain's Prime Minister Boris Johnson calling for an urgent meeting of all NATO leaders and saying he's going to address Parliament and give a statement in Parliament on the situation in Ukraine, set for 5 p.m. local time today. The markets across Europe continuing to post losses of 3%, and the moves into safe havens remains pronounced. Flavia Kraus-Jackson, the head of our US government coverage in DC, joins us now. Flavia, what are we expecting from the White House in response to today's events?
I mean, obviously, all the events unraveled in real time during the UN Security Council, where there was the U.S. ambassador in a rather disturbing turn of events. Biden has been in the Situation Room with his closest advisors, monitoring everything incredibly carefully. There's been some initial reaction, which, as you would expect, is condemnation and a threat of more sanctions. Now, the question really becomes, what are the specifics? There's been a intimation that allies wanted to keep the powder dry. There was a rather slow. The first set of sanctions were pretty underwhelming as the market itself responded in that way. And the idea was how much deterrence is going to be required for Putin to not do what he did. Now that's obviously happened, and the biggest question is, will SWIFT be deployed? That really was always a nuclear option. It's where the allies there was not much agreement. There was a lot of concern that this wouldn't just harm Russia, Russia, everyday Russian people, but would also cripple the economies of the West. So that is one thing to look out for. And then obviously Biden's expected to address later on Thursday. But
we're running out of time. But thank you for the update on the potential US response that we watch for. The markets lower by 3% across Europe. The moves into treasuries, yields down 11 basis points on your US 10-year. Gold is up. Stay with us. This is Bloomberg.
I call on Russia to immediately stop the violence and to withdraw its troops from Ukraine's territory.
There is no purgatory for war criminals. They go straight to hell.
What is at stake now is the existence of the world order as we know it.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Thursday, February 24th. Our top stories today. It's the worst security crisis in Europe since World War II. Russian forces attack targets across Ukraine. Vladimir Putin says the U.S. and its allies crossed a red line. President Biden calls it a premeditated war, and he's vowing to impose severe sanctions on Russia. And the markets react. Oil surges past $100 a barrel for the first time since 2014. Stocks sink and the price of aluminum sets an all-time high. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London with Tom McKenzie. Kailey Leinz, of course, with us in New York. Matt Miller is off today. And Tom, good to have you with us today. This invasion by Russian troops into Ukraine, it all started through the Asian time zone and Asian markets, the first to react then.
Exactly. That was the announcement from Russian President Vladimir Putin, and that was the military action. It occurred during the Asian session, and we saw those pronounced moves lower across the MSCI Asia-Pacific benchmark. And, of course, it's worth pointing out that many countries within this space, China, Japan and South Korea, are major importers of oil. And with Brent at $103 a barrel, implications, of course, significant for those nations. Currently, and they closed down at 2.8% across the benchmark. The Hang Seng over in Hong Kong dealing with a COVID outbreak, potential lockdown there, and then, of course, the geopolitics of Ukraine and Russia down 3.2%. The Nikkei, and talking of Japan and its dependence on oil and gas, down 1.8%. And the bid to safe havens, you saw that more pronounced in the dollar. That's why you're seeing dollar strength over yen, up 0.2%. But there was also a move into yen as well as investors look to those safe havens. So the response was marked across the Asian space. And against the vulnerability when it comes to that inflationary shock and that oil shock from Russia is not insignificant for these nations.
Well, and Tom, it's kind of the same story here in the U.S. in that you are seeing investors fleeing risk assets and running into haven assets. That is evident when you look at futures down around 2% across the board when it comes to the U.S. benchmarks. But the loss is being led by technology. The NASDAQ 100 futures are down about 2.5%. That would put potentially that index into bear market territory come the opening bell in about 4.5 hours' time. That would mean it would be down more than 20% from its previous high. As for that flight into haven assets, you're seeing that evident in the flows into U.S. Treasuries. A big bid for the 10-year. It is down by about 12 basis points, that yield to 187.50. So a lot of flight into the perceived safety of government bonds. You also are seeing, of course, as Tom alluded to, a big reaction in the commodity space, specifically in oil. When it comes to WTI, those futures up about 7.5%. We are looking now very close to a 99 handle, 98.96. Is where we trade at the moment. And of course, it's triple digits on Brent, which I know Anna is going to detail in just a minute. But I would note, Anna, when we talk about fleeing risk assets, it isn't just specific to stocks. It is also hitting cryptocurrencies incredibly hard. That is true, too, for Bitcoin, which is down around 6 percentage points, trading around the 35,000 level. That is the lowest since July of 2021, Anna.
Yeah, absolutely. So focus across all of these assets. Let's linger on the equity market story then, Kailey, when we look at the European map, which certainly screams red to my left here. And we don't go to the far side of this map all that often, but let's do that. This is Ukraine. We have markets around here certainly coming under considerable pressure. The market over in Poland, for example, down by 9%. The Turkish market down by 7.5%. The Baltics obviously reacting as well. But this is broad-based. Yes, there's very much regional expression and specifics around companies that are being sold off and assets, but it is very broad, down by 2.8% on the FTSE 100. The CAC 40 down by 3.9. The Xetra DAX, links between the Russian and the German economy, often talked about, and that market down by more than 4%. This is the extent of the damage we're seeing to the Russian equity market in just today's trade, down by 27.6%. It wasn't open all the way through its normal trading hours. They had to suspend the trading and then restart it. We know that the central bank has been operating in FX markets as well. The ruble pushed through some new lows. Sberbank is one of the biggest banks over in Russia, and that stock down by 38% in today's session. So these are just moves in today's session that we're seeing for Russian assets. $250 billion worth of market cap being lost from the Russian equity market as a result of this sell-off we're seeing. This is where this gets into the sort of the Western dialogue in terms of the inflation story, though. Kailey was mentioning we are triple digits on Brent, and we are 104.45, up by 8% in today's session. And this is the benchmark natural gas, 117. This is per megawatt hour, euros per megawatt hour. It's not 160. That's where we were in December, but this still is a substantial spike up compared to the close, up by 32%. Kailey?
Yeah, it's quite a move, Anna, and we will continue to watch the moves in the commodity complex throughout the day. And as for what else we are watching in the day ahead, G7 leaders are scheduled to meet virtually to discuss Russia. We will look for the outcome of that meeting as Western countries discuss potential further sanctions now in reaction to the invasion we have seen overnight. Also in the UK, all remaining coronavirus legal restrictions in England will be ending today. We'll get some earnings out as well. Alibaba will be reporting results before the market open. And then on the economic data front, we'll get initial jobless claims, personal consumption, and new home sales here in the U.S. But really, Tom, it is the geopolitical narrative that is overarching the theme we are watching today.
Absolutely central to everything that's happening now. The top story, Russian forces have attacked targets across Ukraine after President Putin ordered an operation to demilitarize the country.
Circumstances require firm and immediate actions from us. Donbass's People's Republic asked for help from Russia. I decided to conduct a special military operation. Its goal is the protection of people who, during 8 years, suffered from abuse and genocide from the Kyiv regime.
Putin's move has prompted international condemnation and threats of further punishing sanctions on Moscow. Let's get more then with our reporters across the world. From Moscow, we're joined by Bloomberg's Henry Mayer, who covers politics and international affairs. From DC, we're joined by Bloomberg government reporter Jack Fitzpatrick. And from Brussels, we're joined by our European correspondent Maria Tadeo. Let's start with Henry Mayer in Moscow. Henry, get us up to speed on the military actions by Russia in Ukraine and what we think the ultimate endgame is for Vladimir Putin.
Right. I mean, it started this morning, early morning Moscow time, with a televised announcement by President Putin that he was launching this military operation. And he said the justification for it was that Russia wanted to demilitarize Ukraine and to denazify what he called the Kiev regime. So on the ground, we are seeing, as of the morning, a barrage of missile, air attacks, artillery attacks that took place, which the Russians say took out their air defense, the Ukrainian air defense systems, and then that's been followed by a ground attack from several different locations.
And Henry, are we closer to understanding what it is that President Putin is trying to achieve here? Because on the one hand, these attacks look to be broad-based geographically. We see attacks now coming from the north, from the east and from the south, from Crimea, which Russia holds. But at the same time, President Putin says he doesn't want to occupy Ukraine. So is this all about regime change?
I'm afraid that's what it looks like. A senior lawmaker from the ruling party said on state television that the goal is to install a government in Kiev which will be friendly to Russian interests and not allied to the United States. So it very much looks like the objective is to remove the current government and install a government that would support ties with Russia.
Potentially the end to Ukraine's post-Soviet Union independence. Thank you so much to Bloomberg's Henry Mayer in Moscow for us. Now let's get to Washington, D.C., because today's big take notes that U.S. officials spent hundreds of hours over 5 months debating, crafting, then touting a punishing array of economic sanctions to try to deter Putin from invading. But almost from the beginning, many shared the same view. This strategy probably wouldn't work, and those concerns proved prescient today. Let's get to Jack Fitzpatrick, Bloomberg government reporter, who is in D.C. for us. Obviously, Jack, we have already seen some limited moves from the Biden administration. What is their next move?
Well, we'll find out today because the president is meeting virtually with G7 allies to discuss that and just said in a statement last night that there is going to be an announcement on follow-up sanctions. I would note that Congress could get involved and could even push the president further. He has the legal authority to impose the kind of sanctions, at least the ones that are possible to impose unilaterally, that he has described. But we heard from Chris Coons, a senator who's a close ally of President Biden, saying Congress should get involved. I think there's a major question as to whether the U.S. nudges European allies toward the SWIFT option, targeting the SWIFT financial transaction system. Another major question is to what extent any sanctions target Putin personally and other people close to Putin, and how much it targets individuals rather than a broader approach. But clearly there is a lot of support on a bipartisan basis in Congress for a very severe set of sanctions. And then the question is exactly what happens next. There could be pushback from Republicans who have already started to call for military readiness. But there's a lot of support for significant sanctions that we could see as soon as today.
So, Jack, if sanctions will be the immediate focus. I know that President Biden spoke to President Zelensky. He also spoke to Stoltenberg of NATO. I guess other subjects that are going to be much discussed and the rest of the world will want to hear about is to what extent the U.S. is going to support the Ukrainians in terms of either offering aid or some military assistance, and also how NATO is going to secure its territory. All of this will no doubt be discussed in Washington today as well.
Yes, and that has come up to a limited degree so far. Speaker Pelosi said yesterday that the top House Democrats involved on the Appropriations Committee were sought out at the Munich Security Conference recently, both because of U.S. funding that could happen for humanitarian needs and military needs. It's not necessarily a lot of money from the federal government's perspective, but could be a lot from the perspective of the Ukrainian defense budget. Coincidentally, there is a government funding bill that is supposed to be enacted by no later than March 11th, so we may see lawmakers tuck in a few billion here, a few billion there, potentially into that bill, and it wouldn't take separate action from Congress. But yes, the issue of U.S. funding, military and humanitarian, has been raised.
Jack, thank you very much. Jack Fitzpatrick of Bloomberg Government. Let's get a European perspective. The EU will hold an emergency summit in Brussels today. European Commission President Ursula von der Leyen condemned Russia's invasion on Ukraine during a speech this morning.
We condemn this barbaric attack and the cynical arguments to justify it. It is President Putin who is bringing war back to Europe. And in these dark hours, the European Union and its people stand by Ukraine and its people.
Let's get more with our correspondent, our European correspondent in Brussels, Maria Tadeo, who joins us now. Maria, a lot of meetings set to take place. I see that Germany's Olaf Scholz wants a special meeting of the Bundestag to take place on Sunday. That seems a long way from now. Tell us what the European conversation will focus on today.
Well, Anna, this is what we know. European leaders are going to meet here at 8 p.m. Today in Brussels. Of course, top of the agenda will be sanctions, what to do next when it comes to Russia. We already had a hint from the head of the European Commission this morning where she said we want to tackle key sectors and areas of the Russian economy. We're going to freeze assets and we're going to stop Russian banks from operating in the European financial system. The goal of this is to stop Vladimir Putin from having access to finance a war operation, because the line coming out of Brussels and Europe today is that this is a clear invasion from Russia into Ukraine. There is no other justification. And by the way, European officials are now saying that they're ready for a whole wave of Russian misinformation, talking about genocide and how NATO attacked Russians first and how this is going to trigger another big wave of refugees. So they're also prepping for what is essentially a propaganda war. Now, on top of this, there will be a real conversation about what to do with financial help to Ukraine. We know this is a country that has been hurting for weeks now, given the instability. And they will also talk about what to do with weapons. We've heard just now from the Ukrainian president saying they're under no illusion. Nobody's going to fight this war for us except for the Ukrainian people. They're facilitating weapons also to ordinary Ukrainian people. He says everyone has to fight from every street, every corner. But again, you know, this is a war that's not being fought on equal terms. Ukraine is outnumbered. And today we're expecting a real conversation about what to do with weapons and how can Ukraine go forward if this war continues to escalate.
Maria, we're seeing some lines crossing now. Moldova closing its airspace because of security issues. That's according to the Deputy Prime Minister, and reports of Belarus doing the same thing. When it comes to the Baltic states, what have been hearing about the concerns there given this military action?
Well, Tom, they really believe they're the next in line, that a lot of this goes back to not just an invasion of Ukraine, but this is a much bigger ideal that Vladimir Putin is pursuing. They point back to an essay that he wrote last year where he said the collapse of the Soviet Union is the biggest tragedy that's ever happened to Russia in history, when he talks about this common origin that all of them would have. When it comes to the Baltics, however, they say with stresses for days, for weeks. This was not a bluff. We know how the Russians work. And at this point, we need to, talk about how to facilitate weapons for Ukraine, and then two, potentially expand NATO operations into regions. And I expect today when they meet, the leaders of Estonia, Latvia, and Lithuania will put this back on the table. We need more troops on the ground here, considering the big difference. And this is really, I can't stress this enough. Those countries do belong to the NATO military alliance.
OK, Maria today on the ground in Brussels with the European response to this invasion of Ukraine by Russia. Putin's decision to order a military attack on that country casting a shadow, of course, over global markets. Let's get more then on the markets response with Bloomberg's Danny Berger. Danny, walk us through the volatility, the choppiness in these markets, acute moves that we're seeing.
Tom, this is a market that is trading first-order effects of uncertainty, fear, and that verges on panic. It does look like panic when you look at assets directly exposed being Russian assets. For our radio listening audience, I have GMM up, which is a function that perfectly encapsulates the fear in this market. Russia assets down 30% when it comes to stocks. At one point, they were losing nearly half of their total market value. Some of those losses paired, but it is still pain. It is still pain in the ruble, which is down more than 3.5% for its lowest level versus the dollar. Now, when it comes to havens, there is a very clear play for havens to find the port in this geopolitical storm. It's all about the dollar today, says Steve Englander over at Standard Chartered. That has been the clear winner with this geopolitical strife. Everything else screaming out red when it comes to Forex. The British pound, a 2 standard deviation move. Now, everything is a buy in bonds, save for Russian bonds. Even the front end of the curve is being bid at this moment. Again, it really just shows you the desire for havens, the desire for treasuries. Commodities is really important today. I just want to pause on this for a radio listening audience. The commodities we have up in this column, all of them have a black box around them. That indicates on this screen a more than 2 standard deviation move. Wheat, Brent crude, natural gas, soybean, everything is moving higher here, which brings the second order effects. After some of this panic calms down, it's going to be this inflationary debate that plays out and what this means for central banks. At the moment, we are starting to see central bank hikes priced out when it comes to the Fed. It was a 50 basis point hike that was priced in as recently as earlier this month. Now we've moved back down to 1 as stocks sell off. Is it a recession that central banks are going to have to cope with, therefore they can't hike? Or is it this inflationary story, which they won't be able to ignore, Kailey?
All right, Danny, thank you so much. And of course, Anna, Danny was talking about the oil story. We now have Brent trading at $105 a barrel for the first time since 2014. And WTI also closing in on triple digits right now, trading at $99.78. So we are very, very close to $100 oil across the board, Anna.
Okay, let us tell you what's coming up on the program. A busy day for geopolitics, of course. The humanitarian story front and center. We'll keep you updated with everything that's happening in Ukraine and, of course, the read across then into markets. We will do that market conversation with the Hong Kong Exchange Executive Director and CEO, Nicolas Aguzin. That conversation coming up shortly. And we'll stay on the latest out of Ukraine with LSE International Relations Professor Peter Trubowitz. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie with Anna Edwards here in London and Kailey Leinz in New York. Hong Kong Stock Exchange reported its worst quarterly earnings in 2 years as China tightened scrutiny on offshore listings and widened a crackdown. Bloomberg's Stephen Engel joins us now with Hong Kong Exchange Executive Director and CEO Nicolas Aguzin. Steve, take it away.
Thanks a lot, Tom. Nicolas, good to see you again. Let's get right to it. It's been an extraordinary day, obviously. The Hang Seng was down 3.2%. It might feel like we're in isolation here because of the COVID outbreak, but the market's obviously reacting to what happened in the Ukraine. I want to get your game plan. I mean, your full year results were decent, but that was pretty much because of the previous Q1 a year ago. You've had 3 straight quarters of slowing profit growth. You have all these challenges, including the renewed regulatory crackdown from China. You have, of course, the COVID situation in Hong Kong, and now Ukraine. Give me your optimistic view or your pessimistic view.
Yes, thank you very much. Good to see you, Steve. The reality is that if you look at, for example, the quarterly results, they're very affected by the market. If we look at Q4 versus Q4 of last year, the numbers are, in terms of operational revenues and performance, almost the same, even though volume came down by 10%. But when we look at the year, you're right. 5th year of consecutive record yearly results, revenue and profits up 10%. It will all depend on how volumes go throughout the year. What we can see is that even though the volume went down in the market, our revenue is diversifying more. We're introducing new products, new derivative products, and that's creating a great momentum for our business.
Tell me about your IPO pipeline. I always ask you about that, and I was curious because your chairwoman, Laura Cha, talked about a healthy pipeline. But look, turnover has dropped off about 45% already in the first couple of months of this year. I think there was, correct me if I'm wrong, only 6 IPOs in what used to be the world's biggest IPO market in the first 2 months here. What is the pipeline like, and are you getting those homecoming companies from perhaps delisting in the United States? And when are we going to start seeing that pipeline really coming to fruition after all these challenges?
There's about 160 companies that have filed their A1s, which is essentially waiting for their process to be approved. The other thing to note is that you know about the new SPAC regime, high quality SPAC regime that we have. There's already 7 companies that filed in just like less than a month and a half that the program has been in place. So at some point when the companies, the issuers, when they feel that the market conditions are right and that there's sufficient risk-on appetite, the issuers will come out. So right now, the IPO pipeline is at almost record highs. It was a little bit higher a few months ago, but very, very strong, very, very healthy. And at some point, those companies will go either when they need the cash or when they think the momentum is the right one.
Nicolas, if we can switch focus to what's happening in the commodities markets, the spike up we've seen in metals, some at record highs, the LME business, the London Metals Exchange, part of your business, of course. What are stock levels looking like, given the current geopolitical backdrop?
Yes. I mean, as over the last few months, we have seen a depletion of like some of the stocks. The prices are right now quite high. And what we have seen is that the volume has been increasing, as you correctly mentioned. So very healthy growth in terms of volume. And we're monitoring very carefully the situation around stocks, as you've mentioned, to make sure that the conditions still provide for a good, healthy, vibrant market in terms of trading.
You had to step in last year when it came to copper. Do you expect that you need to do more around the warehousing of some of these metals, Nicolas?
Our business is monitoring the situation very, very, very carefully. It's in constant dialogue with the market. And whenever we see that there is a risk of imbalances in the market, we'll step in to make sure that there's a disciplined market behavior around the whole London exchange.
Gucho, very quickly, any staffing issues with this potential, escalating COVID situation in the isolation of Hong Kong?
I mean, there's a combination of 2 things. One, as you know, Steve, the financial market in Hong Kong it was very vibrant last year. So there is a lot of demand for talent. You have that combined with a lot of people looking for opportunities in this new fintech company. So the financial market is feeling a squeeze in terms of talent, given all the demand and the situation of limiting, the travel in between Hong Kong and the rest of the world. Fortunately, from an exchange point of view, we've been coping, quite well, but there is quite a bit of, pressure.
Hong Kong Exchange CEO Nicolas Aguzin, we're running up against a hard break. Thank you for your
This is Bloomberg Surveillance Early Edition. Here is what you need to know. It's the worst security crisis Europe has seen since the Second World War. Russian forces attacked targets across Ukraine after President Vladimir Putin ordered an operation aimed at, in his words, demilitarizing the country. He said the United States and its allies crossed Russia's red lines by expanding the NATO alliance. NATO, meanwhile, says Russia's actions will have geostrategic consequences. President Biden warns he'll impose severe sanctions for what he calls a premeditated war. The president will address the nation following a virtual meeting with other members of the G7. The White House has said it has no intention of deploying U.S. troops in Ukraine. The markets react. Oil surges past $100 a barrel for the first time since 2014. Natural gas prices soared. Global stocks are falling. So are U.S. equity futures. And aluminum rose to its highest price ever. I'm Anna Edwards with Tom McKenzie in London. Kailey Leinz is with us, of course, in New York. Matt Miller is off today. And Kailey, a grim picture in Ukraine, grim images, grim dynamics that we're following geopolitically across Ukraine. And, of course, the fallout evident across global markets.
Yeah, it's grim for those who are along the equity markets as well, Anna. That is evident in the fact that you are looking at losses on U.S. futures that are now 2% or more. We're actually even approaching 3% declines on the NASDAQ 100 as big tech really bears the brunt of the selling pressure. Right now, those futures down 2.7%. That index looks set to open in bear market territory come the opening bell in about 4 hours' time. At the same time, you are seeing investors rushing out of equities. They are rushing into haven assets like U.S. Treasuries, and we see that reflected in a move lower of more than 13 basis points on the U.S. 10-year yield. Right now, we're trading just south of 186. And, of course, we continue to monitor the big moves in the commodity complex, specifically in oil. It is not just triple digits on Brent today, triple digits as well on WTI. We are north of $100 a barrel with a move up of nearly 9% when it comes to those futures here in the U.S. And finally, in terms of other risk assets getting hit, Bitcoin also taking it on the chin today, Anna, down nearly 7%, $35,000, the lowest level since July of last year.
And Kailey, we'll get into the geopolitics.
Sorry, Anna. I'm also going to check on some of those more micro stories as well, and a lot of them are tied to macro in the sense that you are seeing energy, really the stocks that are performing well with those moves higher in oil. Marathon and Cheniere, which of course is an LNG player, each higher by more than 7%. To the downside, though, Yandex. This is a Russian company listed in the U.S. It's a big internet player in Russia. It already is down 36% in the last 4 days. Looking to add to those losses in a big way come the opening bell this morning. It's down 22% in the pre-market session. And finally, I would just note big tech, as I said, under pressure. That's evident in the ARK Innovation ETF, which is lower by another 5.5%, looking for a 6th day of losses, Anna.
And Kailey, we'll get to the geopolitical analysis. And of course, this is a humanitarian crisis. We don't lose sight of that. But let's keep our focus on the markets for just a moment and tell you that story. As Kailey was talking about US futures being to the downside, European equity markets down by 3.5%. Some of the markets a little closer to Ukraine, a little closer to Eastern Europe, down by much more than that. Brent crude at 105. So we're on triple digits on the handle on Brent crude. Also, WTI above $100 a barrel, as we were hearing earlier from Kailey. And so both of those contracts now over $100. The first time we've seen that since 2014. We have money going into those havens, those perceived havens. Certainly the German Bund getting a bid as a result, and so yields are coming down. We've actually seen movement then in the German Bund. We see movement in the UK gilt, the biggest drop in the yields there since 2016. So that's a focus for us. And just to put in some of the big movements, some of the movements that we're seeing in some of the big global assets, euro dollar really on the move today, 1.2% to the downside for the euro. Is a substantial move for the euro. It's not the focus of the market's attention, but clearly the market is concerned about European exposure, European economic exposure, political exposure to what's going on between Russia and Ukraine, and that is weighing on sentiment here in Europe, Kailey.
All right, Anna, well, let's get back to the geopolitical story that is driving all of this action. That is Russia's attack on Ukraine. Peter Trubowitz, London School of Economics professor of international relations, joins us now from London. Peter, obviously we have now seen the West's response or promised response in the form of more severe sanctions. What can sanctions even do at this point if Russia has already invaded?
Well, it certainly can't prevent the invasion from moving forward. We're not talking about deterrence anymore. We're talking about punishment. And I think what we're likely to see from the Biden administration and NATO more generally in the coming days are tougher Western economic sanctions, increased deployments of NATO battle groups to the Baltic states. I would not be at all surprised to see that. And increased pressure. I think we'll hear this in the U.S. Congress to supply the Ukrainians with more advanced weapons. And the purpose of the sanctions, which are likely to target a large number of Russian banks and include export restrictions on advanced technology to Russia, will be to try to raise the cost now to Putin and those close to him. Knowing that it's not going to stop him from moving forward, but I think the general feeling probably on both sides right now is that this is going to be something that unfolds not just over days, but over weeks.
Okay, Peter, it looks as well, and we heard this from a senior lawmaker in Moscow, suggesting that it's regime change that Vladimir Putin is ultimately looking for. How would you expect that to play out in the days and weeks ahead? And what would the further international response be to a move like that?
Well, I think that that's exactly right, that the purpose here seems to be to topple the Zelensky government and install a puppet regime, make it like a vassal state, something like Belarus. But I think also beyond that, it's to put the fear of God in the Baltic states and to test NATO's resolve and unity. And, I think that, the West has already ruled out a direct military response. Putin is obviously factored that in. And so the point of the saber rattling this morning in his speech, early this morning, seems to be to suggest or to tell the West that he's prepared and Russia's prepared to absorb a great deal of economic pain that Western economies impose on Russia, and that he intends to respond in kind.
Okay, so Peter, as we've pointed out a number of times, Ukraine is not a NATO member, but you've referenced the Baltic states, which are NATO members. That would be a different order of magnitude. Do you really think that, from what we've heard from President Putin, he has designs and ideals that take him northward to the Baltics, or does this stop with Ukraine?
I think the focus is on the Ukraine right now, but this puts him on the border with, of course, a number of NATO allies. If he's able to topple the Ukrainian regime and establish control, in Ukraine. I mean, look, it's also important to remember here, Putin's making a very big bet as well, that he can wrap things up quickly in the Ukraine. Many leaders have made this kind of bet before, only to be proven wrong. And so, it's not obvious to me that the Ukrainians are just going to roll over. I don't expect that. So I fear that this thing is going to go on for some time.
And Peter, finally, just looking at other potential Western adversaries, something like China, for example, which has not condemned Russia's moves here. And we saw a headline out of an official in China saying China will not stop defending its territorial integrity. What could the potential ripple effects of seeing Russia make a move like this be in other stages across the world?
Well, I think the concern is certainly in the Biden administration and in a number of Western capitals is that there's not a strong response by them to Putin's actions, that'll be coded as the West being lacking resolve, being disunited, and incapable of responding to blatant aggression. We haven't seen anything like this in Europe since World War II. So there's a lot of concern that China would draw lessons from this with respect to, let's say, Taiwan. It's not obvious that, the U.S. would not respond in a very different way to a Chinese move on Taiwan. So it's important not to, we may be comparing apples and oranges here. But look, everybody's taking Joe Biden's measure as well as Vladimir Putin's.
Thank you very much, Peter. Peter Trubowitz of the London School of Economics. Thank you very much for joining us with analysis. We'll get back to the markets shortly. Coming up, Ian Harnett, Absolute Strategy Research Chief Investment Strategist, will join us as we witness markets seeking havens. We witness commodity prices spiking higher. We'll get to the thoughts of Ian as we look at the geopolitics this morning. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Eurasia Group President Ian Bremmer. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards and Tom McKenzie in London. Well, it is a geopolitical story that is driving some wild market action across the board today. You're seeing the ripple effects of Russia's invasion of Ukraine reflected across asset classes. Investors selling risk assets like equities as well as cryptocurrencies. Right now, NASDAQ 100 futures are down about 2.6%. That tech-heavy index looks like it could be set to open in a bear market. At the same time, you are seeing a flight to safety that is evident in government bonds really across across the world. You're seeing bond yields, gilt yields coming in sharply in Europe. Also in the case for U.S. Treasuries with the 10-year yield now down about 13 basis points. 186.29 is where we trade. And the moves in oil also are noteworthy this morning. We are looking at triple digits on both WTI and Brent. Brent at the 105 handle, WTI still at 100. We are up about 9 percentage points as oil traders, too, have to digest all of the geopolitical headlines. So there's a lot of places to look. Let's try and make sense of how the markets are moving this morning. Ian Harnett, Absolute Strategy Research Chief Investment Strategist, joins us now from London. Ian, what catches your eye on a day like today?
Well, I think you've summed it up very nicely, Kailey, already. You know, if you're looking at this interesting mismatch you've got between the fact that you've got energy prices higher, driving up some of those energy stocks, and yet you've got these bond yields coming down as well as people seek these safe haven outlets. And I think that that's really what we continue to expect to see. You know, you aren't going to get a resolution particularly quickly, as your previous guest was saying, from the looks of it. We don't know the scale of the sanctions. We won't be able to assess the economic impact. So I think the key thing for us is that economic uncertainty is rising here, and the risks of inflation being higher are going up, and the risks of economic growth being weaker are also increasing as well. And historically, that's not been great for equity valuations.
And Ian, what does that mean? Good morning, by the way. What does that mean for the banking sector? A lot of investors have been talking to us about the higher rates environment. Maybe that was good for banks, but that was before we saw all of this geopolitics unfold. Today, this morning, we see some Austrian banks down by more than 10%, some French banks, some Italian banks down by almost 10% on concerns around direct exposure to Russia. Where do you stand on the banking sector?
Well, I think, you know, you have to be cautious on the banks. And, you know, it's very interesting if you look across the European equity markets over the last week and then map that onto the banking sector, you'll see almost a one-for-one trade. And one of the themes that we've had at ASR over the years is you can always judge where markets are going by what the banking sectors and the relative banking sectors are doing. So, yes, that exposure for the French and the Italian banks, the BAS data showing something like $25 billion exposure for those economies. You know, Austria, $17.5 billion exposure, which, given the size of its banking sector, shows a much greater exposure here. You know, those are the areas that are most at risk. So I think, yes, you want to, you know, we would still be saying, you know, you want to be in a more defensive environment. You know, those kind of areas that tend to outperform are drug stocks, healthcare stocks, not the financials, not the industrials. Okay. So that's definitely where we would be at this stage, Anna.
And where does the surge in energy prices take us, Ian? This morning, we saw European gas prices jumping by 30% out of the gate. We still have oil prices moving higher. We have WTI and Brent both over $100 a barrel now. This makes the inflation fight that little bit tougher. Does that mean you hide out in commodities? Do you hide out in that kind of stock? Or are you concerned that this leads to demand destruction?
Well, I think in the short term, you hide out in those kind of areas. So this is one reason why the UK market's held up fairly well. It also may mean that some of those emerging economies hold up, you know, the commodity producers hold up relatively well short term. But, you know, remember that energy prices have a long and variable lag in terms of their impact to the economic growth. So one of what we call our black swan charts is the relationship between energy shocks in the past and economic growth further out. So this undoubtedly will cause greater risk around that 2023, 2024 growth outlook. But for short term, you know, it's probably not going to have that much of an impact. And actually, the ECB put out a note yesterday just highlighting that a 600% rise in gas prices, you know, just took 0.2 off Eurozone GDP, according to their estimates. So I think it's easy to catastrophize these issues. But, you know, what the key message here is that investors are going to stay defensive. It's too early to take on that bounce and look for the short-term recovery trade.
Ian, the swaps markets are significantly reducing their bets on a 50 basis point move by the Fed in March. You're looking still at about 6 rate hikes, 25 basis points. That seems to be the market consensus, though our MLive team says that could move down to 5 quite easily. To what extent does this throw a span in the works of the Fed and the ECB?
Well, at one level, you could say it does the work for them. That they were concerned about, growth being too strong. That I think that we would say yes, they will probably respond to this by being more accommodative in terms of their monetary stance rather than more aggressive. I think they will be concerned if it does provide much more of an inflationary shock than a demand shock. But remember that they've tended to look through these things where they can. And I think that will still probably want to be the basis of their behavior, rather than just saying, right, we're going to respond to this by higher rates. So, the natural response here is actually to ease monetary policy. And that is one of the reasons why in the past equity markets have been able to bounce, because if you've had large geopolitical events, they tended to be met by monetary policy or fiscal policy stimulus. And, the question here is whether that will occur preemptively or whether it will be, ex post.
Yeah, when do we get to that particular point? Ian, thank you very much for your time. Ian Harnett of Absolute Strategy Research, thank you so much for joining us. Coming up on the programme, Brent surging past $100 a barrel. We'll dive into the impact on oil markets. We also see headlines that tell us that NATO is going to hold a virtual leaders summit on Friday on Ukraine. More on that shortly. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie with Anna Edwards here in London, Kailey Leinz in New York. Oil surging past $100 a barrel. That's for the first time since 2014. Let's get more then with Kriti Gupta. Bloomberg Markets correspondent Kriti, the moves in these oil markets pronounced. We're looking ahead to OPEC Plus, but there's real debate and doubt as to whether more supply can come on the market to alleviate these pressures.
Yeah, absolutely. Brent circling that 105 level. You have WTI nearing $100, if not already crossing it. What's important to keep in mind here is that geopolitical premium is arguably already priced in. We did start to see a little more of that increase. Remember, the big question, though, is how does it move the ruble? Because you are seeing Brent actually get higher to 105, but the ruble continues to weaken down past that key 80 level. What's significant here is, do you start to see more supply, not just for oil, but do you see it for wheat, for aluminum, for nickel, for all of these commodities that Russia has a big hold in? Right now, the Iran nuclear deal, as well as releases from inventories when it comes to the United States and other commodity-consuming nations, that's really where the spotlight is going to last when it comes to offsetting some of the damage that these geopolitical tensions could do.
Kriti, thank you very much. Yeah, the job of exporting from Russia perhaps gets a little easier if the ruble continues to weaken, but we know the central bank has had to intervene on that front. Thanks to Kriti Gupta. Let's get to Katia Yafimova, who's a senior research fellow at the Oxford Institute for Energy Studies. The perfect voice to speak to today then, Katia, given what we're seeing in energy markets. How sure should we be about the continuation of Russian supply of gas and of oil to international markets?
Hello. Well, my understanding is, and my assumption is, that supply of gas, Russian gas to Europe will continue through all of the existing corridors, including across Ukraine, Poland, and Nord Stream 1. But of course, there is now a caveat, and it's heightened tension because of this military operation and the shock of it. There is a possibility that there could be a physical damage to the transit infrastructure, which still transit about 25-20% of Russian exports to Europe. If there is a physical damage to it, that could be a problem, and potentially worst case scenario, that would be a loss of that supply.
So physical damage is one thing. What if the West, in retaliation, decides to cut Russia off from the SWIFT payment system? What happens to commodities then?
In my view, that would not happen. But if the West were to decide to cut Russia off from SWIFT, basically that would mean a contractual force majeure, its inability to pay for those imports, and that's a justification for basically stopping supplies. Because if this gas is not paid for via SWIFT, and until an alternative payment system is established and used, there is a justification not to supply gas unless it's paid in full and in time.
Katya, give us an update on what storage and what capacity there is in Europe at this point for LNG, and whether or not places like Qatar can add to supply and alleviate some of these pressures going forward.
I mean, if there is no cut off supplies through Ukraine, is no big issue. But if there is, that's a problem. But the market, the gas market in Europe particularly and globally has been so tight that actually any supplies that could come to Europe, they would have come to Europe beforehand or already. So it's not really much more available gas where it would come to compensate for potential loss of Russian gas, if such loss is significant. And then we are talking about loss of, for example, Ukrainian supply, or if we are in absolutely worst case scenario, talk about complete halt to supplies via all corridors, which I still think is very much unlikely. But that's a massive volume, and it cannot be replaced from anywhere else at that notice for a prolonged period of time. And storages are already very, very low in Europe, and that's probably not just for this winter, which is finishing, but for the next winter, and refilling of European storages. So it's pretty much demand destruction in industry and power,
Katya?
if all supplies are cut. Yeah.
Thank you very much. Thanks for joining us. Katya Yefimova of the Oxford Institute for Energy Studies. Lots happening this morning. We've heard from Olaf Scholz, says he'll speak in a special parliament session on Sunday. That is the German Chancellor. Condemnation, plenty of condemnation coming from European leaders all the way through this morning. Meetings set to take place today and tomorrow. A NATO meeting called for tomorrow, a virtual one. We'll see what the sanctions picture looks like by the end of today. This is Bloomberg.